You're listening to the Accredited Investors Only podcast presented by Accredited Life.
Amanda, welcome to the show. How you feeling today?
I'm doing great. Excited to be here and talk about how we can pay less tax.
And that is a topic that I'm sure every accredited investor and every investor, every person out there probably likes to hear and maybe not always talk about, though, right? It's one of those things where it's not always the sexiest subject, but it's one of those, it's probably one of the most important, right?
Yeah, and I think I don't know, people tend to think, or I guess we're taught that taxes is just something that sort of happens to us. We kind of get hit with taxes every year. Every what is it? There's a saying that the only thing certain in life is death and taxes.
Yeah.
Which may be true, but there's certainly things that we could do to impact, how much or how little taxes we pay, right?
That's a good way to put it. Well, how about you introduce yourself to the audience in your own words so we can hear from you what it is you do and that kind of thing beyond just the like you said that right there.
Yeah, yeah. Well, my name's Amanda Hahn. My firm is called Keystone CPA. What I like to tell people is I'm a CPA by day and real estate investor by night. So, like many of our listeners, I also have a real estate portfolio too. But my firm's specialty and my specialty is in helping people to reduce taxes through real estate investing. And so our clients make up kind of a pretty diverse range, all the way from a busy professional working full time or working their own business, investing in real estate on the side, all the way up to people who do large syndications, real estate funds full time.
Gotcha. Okay. Well, let's kind of break into that then, because my brother comes to mind. He's a corporate America. He does very well for himself, but yeah, and he's in a very high tax bracket. How do you work with somebody like that? So somebody comes to you. They are you introducing them to the concept of real estate investing and the tax advantages it provides, or how do you work with somebody who has a heavy tax burden, but they're not in the game quite yet?
Yeah, I think thankfully for me, most of the time when people come to me, they already know that I want to invest in real estate as one of their wealth building asset classes. So it's just a matter of, when we do tax planning, and tax planning, by the way, is the only way you can truly save on taxes legally. We all file our tax returns, right? March, April, we meet with our CPA. But to truly save on taxes, that's not done when you file last year's tax. It's done throughout the year. So for someone like your brother, as an example, we want to do planning during the year so we know by next April, can we pay less tax than what we paid in the current year. So when you do planning, meeting with your CPA, you always want to take a holistic approach. So we want to know, like, what is his job? How much income is he making from there? That's kind of the problem, right? The tax problem.
Sure.
And then figure out, like, what does he want to invest in? What are the different asset classes, and what is that tax implication or benefits of investing in those different asset classes?
Gotcha. Okay, because that was going to be my next question is what is tax planning, right? I think, like you said, it's death and taxes, and it's just kind of something that happens. But planning kind of gives you this. Now you're taking a little bit more control over the situation, right? Where it's not just something happening to you, but something that you're kind of helping to steer in a certain direction, right?
Yeah, I mean, it's really interesting if you think about it. The tax law is made up of basically a bunch of incentives, right? When you do certain things like, build businesses, hire people, provide housing, then the tax law gives us incentives to do all those things through business write-offs and tax credits and things like that. So, from a planning perspective, it's a matter of looking at what is your goal with, financially, and can we implement those goals in a way that maximizes the tax savings potential? Because, taxes is actually one of the biggest expense items that we have as Americans. I know we all look at, how much did I pay or refund did I get with my tax return? But there are a lot of other taxes that we don't really think about. If you're like your brother, for example, is working a full-time job, um, a lot of his taxes are taken out of his paycheck. So that's already gone before he even sees it.
Sure.
And then also, property tax for our home, for our rental properties, sales tax whenever we go anywhere to buy anything. So all those things really add up. And it's really important to understand that if we can control how much taxes we pay, that's really just more money that we can use to build our wealth faster.
Yeah, well, that's a great way to put it, and probably a very good motivator, for somebody who's not like they think, oh, is it going to be boring or tedious or numbers or this or that? When you put it in that perspective, it makes it like, okay, this is why you should care, right?
Yeah, and I will say too, I know people, like you said earlier, tax is not really like an exciting or sexy topic. And a lot of people are hesitant to do tax planning because they feel like it's very complicated. You don't want to seem like not smart, right? People are like, oh, this is such a stupid question. But what if you really take a look at tax planning, when we do tax planning with our clients, as an example, the client does not need to be a math whiz. The client does not need to understand tax law. Tax planning in the simplistic form is really just having a conversation with your tax person. So like yeah, I would want to know, what did you do in the past? What are you doing, at your job? Do you plan to leave your job? What do you want to invest in? And it's just in those conversations where then your tax advisor will come up with strategies. Do we need an entity? Do we not? What should your spouse be doing to get the benefits? So it doesn't really mean you have to become a tax or CPA or accountant. Just having that line of communication with your tax advisor is the key.
That's a great way to put it, and kind of a good mindset shift, because I think a lot of accredited investors, depending on what type of accredited investor they are, they could be maybe on the controlling side, and they want to do everything themselves, and they're thinking, okay, I'm going to be the one to do this. But then there's also that other, group of people that understand you need a really good team, and you can leverage the expertise of somebody else. And, to your point, it makes it so much less intimidating at the end of the day, right?
Yeah, and as for real estate investors, we always talk about leverage, right? That's like everybody talks about building wealth through leverage in real estate. And I think typically we're looking at money, so leveraging the bank's money, leveraging investors' money, private money. But really, like you said, one of the biggest leverages that we can use is the time and expertise of other people. And that's what I really love about syndication investments. It's like Amanda by myself probably can't take down this large multi-unit, but I can be a part owner if I can leverage the expertise of Peter, for example. Like,
Sure, sure. Well, and that kind of leads perfectly into my next question. So, and probably more of your ideal client is somebody who comes to you and maybe they own a few properties, or they have a couple investments in syndications or funds or something like that. How are you working with them? Is there if say they haven't been doing tax planning necessarily, they kind of just been doing everything, ad hoc, they got something in their personal name, maybe they have a self-directed IRA or something like that. So how do you work with them? Is there anything you can go back and fix in a way, or do you need to kind of set a foundation and then work from there? I mean, what does that look like? So somebody, because I think this is probably much more for our audience. They're doing stuff. I mean, they're investing in real estate, they're investing in syndications, that kind of thing, active, passive. So how do you work with those people? What's that look like?
yeah, I mean, it just really the best way to plan is really to take a holistic look. My husband Matt and I, we teach a lot nationally at different real estate events and conferences. And oftentimes we'll meet people when we come off the stage who says, I have a quick question. Should my LLC, should I hold my rental in an LLC? What I always tell people is it seems like a quick question, but I don't have a quick answer, because for me to really do it justice and answering that question, I really need to spend so much more time with you. I want to know everything about you, like what else do you have going on? What are your equity in all the different properties? What's your role with respect to each of those investments? Do you have partners? So yeah, I think, when we look at tax planning, the earlier you do it, the better it is. But I also tell people better late than never.
Sure.
There are certain things in the tax world where we can go back and do amended returns and recoup some of those lost tax benefits. But there are also just as many things in the tax world where you cannot go back and claim missed items. Sometimes it just becomes more risky to go back and make any significant changes as well. So if we can do it right the first time, it's always better and more cost effective.
Mm.
So what I typically tell people is, get the best tax advice, or, just advisor in general, tax, legal, investment. Get the best advice that you can afford, right? We don't want to break the bank to hire somebody that's more than what we need, but the sooner we get a good team of advisors, the better it is. Then we don't have to worry about reworking or undoing some of those things.
Sure. Now I can think of it from like construction, and doing maintenance and things like that. There's times when I'll go to Lowe's and I think I'm gonna fix the toilet myself, or I'm gonna fix the shower myself or something. I spend $200 and 2, 3, 4 hours, and then they call me the next day and they say it's broken, and I should have just worked with the expert from day one, right? That
Yeah.
example works through so many different aspects of life, right? And in the real estate business. Before we get any further, just so people understand, because I think I'm maybe taking for granted that the audience understands the tax benefits of real estate, but I'd love to hear from you. What are the tax benefits of real estate investing? Why should they care? Why should they be doing this?
Yeah, I mean, real estate is one of the few asset classes where we get to not just take write-offs against our rental income, but we also get to use depreciation. So for, depreciation is always like the wonderful world when we talk about real estate tax benefit. But for anyone who doesn't know, depreciation basically is what the IRS, with the tax code, allows us to take a paper write-off every year on the purchase price of a specific rental building over time. So, and this is true regardless of whether the value of the property actually goes up or down, or whether I paid all cash for a property or there's debt involved, right? So basically, you just look at purchase price and we get to write off little by little the purchase price of that building over time. When you get into more advanced tax planning, like, when you invest in like syndications and things like that, there are other clever ways to supersize some of those tax benefits. But at a minimum, that's one of the things we get to do when we invest in real estate that we don't generally get to do when we invest in the stock market, right? So if I invest in Tesla stock or Apple stock, I don't get a paper write-off. I don't really get to write any of it off until the future when I actually sell that. So that's one of the benefits is, we're always looking at how can I create cash flow without paying too much in taxes? And that's through write-offs and depreciation. And then how can I build wealth without paying current taxes? And real estate allows us to do that because if I invest in a property for, $100,000, it appreciates to 150. I don't pay taxes on that 50,000 until I sell it. And even when I sell it, I potentially have ways to defer or offset the taxes anyways.
Mm, that's a really good point. A great explanation of it. What would you say the hurdles are? I mean, so to that point, you think, okay, I'm making X amount of dollars, I'm paying this much in tax, I better go out and buy some real estate, so I can get that depreciation and these write-offs and things like that. What are the hurdles to do that? I mean, especially if you have a W-2 job and you own real estate, and say if it's does it need to be personally owned? Does it need to be through an LLC? If it is through an LLC, but that's not your full-time job, like, what I mean? You follow me? Like, what are some of the kind of hurdles and maybe like the misunderstandings that you face in talking to clients and that kind of thing?
Sure. The answer of like, what are the hurdles? What is the benefit of me investing in real estate? The answer differs from person to person, because the tax law applies differently to different people. So, but I think at the heart of it, if we start with a profile of someone who is, working full time, right? A married couple, both working full time, high income jobs. High income defined as over 150,000, right? So if you're a high income earner and all you do is invest passively in like real estate syndications, real estate funds, then what you probably have heard from your CPA is that there is no tax benefit for you to invest in real estate. Okay, this is something we hear all the time from CPAs. And when you hear that from a CPA, no benefit investing in real estate, what they're talking about is they're taking a very tunnel vision look. All they're saying is your real estate investment might give you tax losses, but you're not able to use it to reduce taxes from your W-2 income.
Mhm.
And and the reason that that is true is because in the tax world, we have what we call passive loss rules, which means if you're passively invested in a rental real estate deal, you don't get to use the losses against W-2. However, the losses do get to offset taxes from other passive income. And so one way I always look at it is if you're a high income earner, you invest in a real estate deal, if you got $10,000 more of cash flow profit, but you didn't pay taxes on that, right? Because we have write-offs and depreciation, then that's still taxes saved, right? Because that just made more money without paying more taxes. So that's how I challenge people to say, hey, if your CPA says there's no tax benefit, they're just looking at W-2. But what about this other income that I generated that I'm not paying taxes on? And there's a whole slew of other types of incomes that you can make that might be passive, which you can use rental losses to offset against. And I think worst case scenario too, like, if you don't use any of the losses this year, they get to carry forward indefinitely into the future. And as every investor's goal, our plan is always to have some sort of taxable income, or at least eventually when this property is sold, I'm going to have gain, right? By making a profit on the sale. So all those tax benefits that you weren't able to use in the past, you can't use it eventually when there's profit or when there's gain.
Yeah, that's very powerful, especially in a syndication where the business plan is to sell and a lot of the money's being made on that sale. So if it's adding up, compounding the tax benefit year over year, it's something to be said for that, right?
Yeah, yeah. And then, if you're but, let's take a different profile, right? If you're someone who's high income earner, but your spouse is a stay-at-home spouse or someone who's not working full time, if you also have your own portfolio of real estate and your spouse, in this example, can claim real estate professional status, then that's the kind of the best of all worlds, because then you can start using rental losses to also offset taxes from W-2 income or income from a non-real estate activity too, right? So it kind of differs from person to person, but at the heart of it, there's absolutely tax benefits to real estate investing for everyone. The difference is just how much can I benefit this year versus how much can I benefit in the future, right? And that'll be different from person to person.
Yeah, that makes a lot of sense. So what should so we talked about tax planning, we talked about kind of the custom tax planning and understanding, a person's individual situation, what they're doing now and what their goals are and things like that. And you also do what you call comprehensive tax planning and wealth planning and all. How does that work? How does that go beyond? It seems like that's even another level, right? Of taking it even deeper into what you can do, right?
Yeah, I mean the comprehensive plan. So yeah, for all of our for everyone, right? Not just our clients, but everyone in general. I always recommend that tax planning where we're never looking just at real estate. We're always looking at everything about you as a taxpayer. So your business, you mentioned self-directed investing, right? Like where are the lazy assets we have, equity in our home, in our rentals, retirement account. How do we maximize all that to build wealth? So to get to the next level, a lot of times what happens is you're going to need more advisors, right? Beyond tax. So you're going to start working with like estate planning attorneys
Sure.
to make sure we're not just building wealth for ourselves, we're now looking at the next generation. So for us, a lot of our clients, when they get to that next tier, it's like, okay, well, I really need a whole team around me. It's beyond just like me and a CPA. It's a conversation that kind of involves like the whole team.
Sure. So it starts to have like somewhat of a family office approach at that point.
Yeah.
Gotcha. That makes a lot of sense. So how did you get into real estate? What was kind of, I feel like not every CPA, like you said, has the knowledge or the understanding of what the benefits
Yeah.
of real estate are and the power of it. How did you find yourself in
Yeah.
that space?
Well, my story is a funny one. So I'm actually a third generation of real estate investors. My grandparents invested in real estate. My parents dabbled in real estate. And where I grew up was in the condo complex that my grandparents owned. So I was like the landlord's grandkids. My grandparents were very hands-on, collect the rents and, talk to the tenants. And so growing up, I never wanted to own real estate. I was like, I'm getting a corporate job. I want to be in an office
Sure.
on my phone. So I got my accounting degree, went to one of the big four accounting firms, and I ended up in the real estate group accidentally. So all of my clients were real estate investors. They kind of just opened my eyes to a different way to invest in real estate. Like I saw as an advisor, the power of wealth building, tax savings, all those good things about investing in real estate. And yeah, I just finally realized like, hey, I can invest in real estate without being a hands-on landlord and
Mm.
living amongst my tenants.
Sure, sure.
That kind of shifted my goal. And that's one of the reasons my husband and I, we invest pretty prolifically with our own properties and also through syndications as well. And that's one of the things is like, I love the ability to leverage other people's time and expertise. And that I don't have to do everything myself to be a real estate investor.
Yeah, no, that's certainly I kind of the similar story, and my father was a property manager, facility manager. So growing up, I would always see what he was doing, and we would drive to properties together, and just seeing the maintenance side of it, and that management side of it, and storms and things like that. He'd be up 2, 3 o'clock in the morning on the phone. I just thought, I don't know if that's what I want to do. But it was when I got into the accredited investing world and fund management and syndication space. I never look back. It was just like it was a totally different version. To your point, where you could leverage, and I've actually. I think maybe I have my like some foundation in management. I enjoy it now more than I ever did, but we have a great
Yeah.
team around us, which certainly helps too. So for an accredited investor that wants to get into this or take things to the next level, or maybe they're doing it now, but how much of a would you say, is this like a one and done kind of a thing? Or this is like an annual thing. Like you have to constantly be, and then the things change, right? In the tax code and stuff like that. So what would you say their approach should be to it? And then and then my follow-up question is going to be, if they're not doing it, then what questions should they be asking? I mean, and what kind of path should they be taking, that kind of thing?
Yeah, great questions. I always tell people tax planning is sort of an ongoing process, but I do recommend everyone do kind of an initial comprehensive planning. So, like if you're someone who always historically just filed your tax returns, now is a great time, or it's always a great time to contact your tax advisor and say, "Hey, let's sit down and get a plan in place." Right. So there's an initial step which takes a little bit of more work. If you haven't done it before, to kind of go through a deep dive of everything. What am I working with here, right? My entities and where am I at today? And then build out a plan kind of in the longer term. Here's my short term tax planning. Here's my long term tax planning. And that typically should jive with what is your investment plan, right? Those kind of go hand in hand. But thereafter, like for us, for example, we have a pretty hefty, large upfront amount for clients to work with us. But thereafter, every year, it's a much lower amount. Why? Because now that we have a plan together, in future years, it's just about maintenance, because we kind of are just working towards that plan. Tax law changes, your income changes, your profile changes, real estate market changes. But at that point, we're just kind of tweaking things little by little during the year to make sure we are still on the right path to our goals. Um, if you haven't done tax planning, like I said, talk to your tax person, say, hey, can I come in? Or, let's get on a Zoom call. I want to do some planning. And here's a trick. Okay. When you ask to do tax planning, when you meet with them, pay attention to what's going on. Okay. What oftentimes happen that I see is the investors, maybe they heard us on this podcast and they're going to talk to their CPA and say, hey, I heard about depreciation. I heard about, I can use this against my income. I heard about this. I heard about that. And so you kind of have a list of questions for your CPA, and then they're going to knock through, yes, no, no, you can't do that. That's too expensive. If that is your experience in this planning session, then understand that's not really planning. It's just a Q&A of like, you want a bunch of stuff, you're asking them yes or no.
Sure.
True tax planning is, like I said earlier, it's your CPA asking you questions. They're not about taxes, believe it or not. It's like, well, Peter, tell me what you've done in the past. Explain your entities to me. What are you planning on doing for the rest of this year? Are any properties we're going to sell? Are we going to refinance? What's our exit strategy here? And it's in those conversations that your CPA is able to identify different opportunities for you in terms of entities, right? So it shouldn't be a question of like, what entity should I be in? It should be your CPA asking you, who else is involved? How much income are we making? Then they'll tell you what kind of entity, where should you form it, what should it hold?
Yeah. Wow. That is an amazing answer. I love that. Because, and I say this all the time on the podcast and podcasts I go on and all, that's constantly my advice is you have to learn how to ask really good questions, but more so important is the other person on the other side. Are they asking really good questions? That's such a good, like, kind of secret, because it's like, if they've done this, if they're good at it, then they should know all the right questions to ask you. And if they're not, if it's really one-sided where it's just you're throwing questions out and they're not really asking you anything, then are they really have the information they need to make a good decision, that kind of thing? Because they might just have a box, right, where they kind of work within that box and they're not really able or have the want or the need or the skill set to get outside of that box. And but if they're not asking you a lot of questions, then chances are that's a good indicator that they might they might not know the questions to ask, right?
Yeah, yeah, that's the difference. Like I think it's either you if you're asking questions, it's kind of a Q&A session, right? If they're asking the questions that then it's really tax planning. It's kind of like when we go to a doctor, we don't have a bunch of questions to the doctor. The doctor has all these questions for us, like
Sure.
where, when did the pain start? Is it sharp? Is it dull? How long is it? What if I do this? And they're not silly questions, they're questions designed to lead themselves to a path of what's the prescription I'm going to give this person, right?
Yeah,
The problem
yeah.
they have.
No, that's great. And I think too, from an investment standpoint, like if you're investing with a syndicator or in a fund or something, and and the person on the other line isn't really asking you any questions. It's just that they're raising money from anybody and everybody. You know what I mean? They might not
Yeah.
necessarily care how much this investment meets your goals and things like that. So that's a really I love that. That's good advice and just puts things into different perspective. You know what I mean? It's just I don't think everybody thinks of it that way. Anything
Yeah.
else you think accredited investors navigating the tax world now and into the future need to keep in mind? And it seems like it's one of those things where you really need to work with somebody. It goes back to what we were just talking about. You really have to work with somebody who's there doing all of that. But is there any kind of resources or tools or books or anything like that that you would recommend for somebody to just kind of who's interested in learning more, you know, to take things to the next level, kind of?
Yeah, I have I've written my husband and I wrote two books. The first one is called Tax Strategies for the Savvy Real Estate Investor. And the second one is the advanced book on tax strategies. And you can find both of those on Amazon, Barnes and Nobles, anywhere books are sold. I actually recently put together an ebook called Tax Benefits for Passive Investors. You actually can't even find it on my website yet. But Peter, what I'll do is I can email you the link to it.
Okay.
And then you put it in the show notes. And that one is
Great.
specifically for passive investors, essentially people who don't own real estate outside of syndications and things like that. And the reason I wrote that was really just to, again, dispel that myth where CPAs are telling people there's no benefit if you're just a passive investor. So in that ebook, we go through what are all the different benefits you can get as a passive investor. So I'll send that information over to you.
That's amazing. Awesome. Well, no, we'll leave it here. I saw something on your website that you said it says you were a big foodie. What do you? You're talking to one right now. What do you like? Where do you like to cook? Do you like to go out? You like to do both? What do you like to eat?
Well, both. I just love eating. You probably saw that on my Instagram. That's usually where I put it. For those of you who want daily tax tip, the best place to find me is also on Instagram as Amanda Han CPA. I love all foods, but my preference usually is towards Asian foods, of all kinds. And I my preference is actually like hole in the wall, little known places rather than like fancy restaurants. But I love all food. I'm not a good cook, but I cook because I love to eat.
It's a good way to kind of wind down, right? From real estate, and I'm sure the tax stuff. I mean, I can get you in the weeds, right? And it's just a kind of a good something to clear your head and focus on the finer things. And it's always why I always think it's so important that people ask themselves, why are you doing all this? I mean, there were so many things that you said during the show that in the interview that was just put things into perspective on the motivators of why you should be doing this. And food and life and your family. I saw that as well. They're all the reasons that you're really doing this stuff at the end of the day. So you got to take time for those parts of life as well, right?
Yeah, for sure. I mean, if you think about it, tax savings is really the easiest money you can make, right? Because you already work for that money. We're just going to keep more of it. And that indirectly then allows us to have more freedom of time to spend on with our family or, checking out the latest hole in the wall food place.
Well, that's a really that was another gem of just putting things into perspective. It's the easiest money you make. You've already made it, right? It's just now it's trying to
Yeah.
find a way to keep it.
Keep it.
So how can people get in touch with you? How can they learn more? I know you mentioned a few things there, but was there anything else where they can find you?
Yeah, my company's website is KeystoneCPA.com. And yeah, if you're looking for daily tax tips, Amanda Han CPA on Instagram. If some of the stuff we talked about is kind of new to you, I do provide a lot of longer form content on YouTube as well as Amanda Han CPA.
Great. Amanda, thank you so much for being here today. A lot of great gems within the show. I'm looking forward to going back and listening to it myself. I mean, just take some notes and things like that. So I really appreciate you being here. Thank you so much.
Yeah, thanks, Peter.